Hello, family. Thank you for joining me tonight. We are doing a live stream. This is the second night in a row, third night in 4 days. I appreciate you for rocking with me. If you're new to the channel, if you haven't seen me before, I am Sir Ashley. And on my channel, we talk about money, real estate, and personal finance. In today's video, I want to go over a guide to buying a home in mid 2022, the do's and don'ts. And I have a guest, Joy.Bailey. We will introduce her in just a second. Now, I want to go over this because this market, mid 2022, is unlike any other market we've ever seen. We haven't quite gone through these set of facts, this fact pattern, ever in US history. So I want to just provide you some insight. Now, if you did not catch the other live streams, please be sure to go ahead and check those out. On Friday, I brought you just the facts regarding the housing market. On Sunday, I tried to bring some positivity. Me and Keena tried to bring some positivity and let you know the bright side or the positive things you should be looking for if you're a buyer. And today, I want to talk about the do's and don'ts and the guide to buying a home in 2022, mid 2022. Now, when you come in, be sure to hit that like button, share this with colleagues, friends, and leave a comment. I greatly appreciate it. Now, I want to introduce you to Joy.Bailey. She's been on the channel before. So thank you, Joy. She is she's a mortgage consultant, senior mortgage broker, and consultant. She is absolutely amazing, dropping gems for her clients. And I just found out, we just spoke like maybe 2 minutes, 2 minutes before this. She got 3 contracts done today. So if you are in the market for a home loan, please reach out to her. Her contact information is in the description below. And she's licensed in multiple states. I put all the states in the description, not just North and South Carolina. So thank you, Joy.
Thank you. I appreciate you so much. It's been quite a wild ride in the last 60 days.
It's been crazy. It's been crazy. Thank you, Gladiator. Thank you for coming in and watching and leaving a comment. I greatly appreciate you. So I want to jump right in. Do's and don'ts. This is a quick guide on not a step-by-step, but a guide to buying a home in this crazy market right now we're in mid 2022. As you just said, today is not like it was 30, 45, 60 days ago, and definitely not like it was in the beginning of the year. So I'm putting you on the spot. I have a little list, but what do you say the first do is?
Save your money.
That's on my list. Yes. So can you expound on that? What do you mean by save your money?
Save your money. Like, it's so much you have to be prepared for in this market with it being so competitive. People are waiving finance contingencies, appraisals, having to be prepared to pay appraisal gaps. You have to be prepared, at least in North Carolina, to have due diligence money that's considered competitive. You know, honestly, I hate to say it, but it's almost gone are the days where 3% down payment is going to be enough if you've just scraped up just 3%. You have to be prepared to cover your own closing costs. And you may even have to be prepared to pay down some debt if the interest rates have risen to the point where your affordability has been impacted.
No, I'm glad you touched on all those things. Thank you for mentioning those. Yes, I'm telling people to make sure you have your money right, meaning make sure you have not just your down payment, but closing costs. And as you mentioned, in North Carolina, I know we have people across the country watching this, not just North Carolina, but in North Carolina, we have something called um, a due diligence deposit as well as an earnest money deposit. Now, I plan on doing a video, I haven't gotten to it yet, just talking about what due diligence deposit is. But for all purposes of this video, it is a fee you are giving to the seller that you're not going to get back. Once you go under contract, It's just a thank you for choosing me. And it's almost like I don't want to get a legal term, but you're just giving them money to allow you to inspect the property, and you're not getting it
Oh
back.
my
They don't.
God.
Yes, on as soon as they accept your contract, your offer, you're under contract, and you have to write them a check, not to the attorney's office or anything like that, to the sellers, and they're going to cash that immediately and not give that back.
Absolutely.
So make sure you have all that together. You mentioned competitive due diligence fee, and also 3% down. What are you seeing as far as competitive due diligence, and what down payment should people expect to have right now?
I mean, people are being extremely aggressive. I can give an example right here in Charlotte this past
Mhm.
week. The lady, this was like her fourth or fifth attempt at getting a home because she hadn't been aggressive enough. And this time, I mean, she put all the chips in. The purchase price, I think it was listed for 375. She offered
Mhm.
75.
What did
And
she offer? I'm sorry.
the price was 375
Yes.
and she offered 475.
Oh, wow.
Yeah,
Yeah. Now, tell me, did she win?
she won.
She better have won.
Right. You hope so, but you never
Oh
know. No,
man.
she won.
What kind of due diligence fee, if you don't mind,
Yeah.
range? It doesn't have to be the exact amount.
I mean, due diligence. I'm seeing people in, five figures doing due diligence. It's
Oh
not,
yeah.
$3,000 or $4,000 anymore. It's the whole down payment.
I've had now it hasn't been recent. It was last summer. I had somebody put down six figures for a due diligence deposit
Yeah.
for a for a 350 three hundred
Oh,
$365,000 home. Granted, it was an investment property, right? He had the funds. He had the funds,
okay.
right? But he was like, I want it. I want it. And this is gonna be what I put down anyway. So let's do it.
Yeah, you got to be prepared to lose some money if you can afford to play the game.
Now, Pippi, I want to get to you. Two things for you. We have a comment from Pippi Playtime. Now, I want to cry as she thought 3.5% would be enough, but it won't be enough based on what you're saying. Pippi, two things. Shoot me a message, shoot me a text. You said you've been reaching out and we haven't gotten to you. I'm about to leave my number in the comment section. Shoot me a text. I will make sure we get to you. Um, Second thing is it depends on what you're going after
Yeah.
regarding due diligence, deposit, and how you structure your offer. If you are going for a home that is, now, correct me if I'm wrong, if you're going for a home that is done all the way up, is fixed, move-in ready,
Mm.
has been updated, and it's in the price point between 250 all the way up, I'll say to 450, $500,000, that is the most competitive market right now.
Mhm.
So you can bank on having to go the extra mile to get your offer accepted. Do you agree with that, or how do you assess that?
I mean, I tend to leave all of that to the realtors,
Yeah.
but I mean, from what I see when the contracts come across my desk, yes. I mean, and I will also add, to that list of things that you need to be ready is be ready to follow directions. Because
Whew.
the
That's on my. You've been. I did not give you this list, but I that is on my list.
the realtors know what they're
Yeah.
doing and what
Yeah.
they're talking about. If you go with the right one that has some
Hmm.
experience, they're going to be able to offer the right advice. They're going to know what the due diligence is being commanded in that
Yeah.
particular market at that particular price point.
Yeah.
They're going to be able to know, has this home been on the market, a week, a long time. you know, there's
And
a lot of information that they're going to be able to be privy to guide you in that decision making. But ultimately, the decision is yours. But I assure you, what I'm seeing a lot of is people wanting to do it their way, and then they come around
yeah.
eventually. They
Yeah. No, and that's another do is follow the advice of real estate professionals. Get somebody that is active, putting in offers, representing people, whether make sure your team is strong and active. It doesn't matter what they did 3 years ago or how long they've been in the business per se, if they haven't done anything recently and not just one off deals. They have to be in the trenches every day because while what you're saying is correct as far as it being extremely competitive in that price, well, it's extremely competitive in that price point, what we both said, there are opportunities that you can sneak in there and get your offer accepted without going above and beyond. So higher vibration, do not get discouraged. Pippi, do not get discouraged because there are opportunities, but you have to be willing to accept or hear the advice of the professionals that you are surrounding yourself with. You've reached out to professionals, so it's only right that you use their expertise and knowledge to put you in the best position possible. You don't go to the doctor and say, you know what, thank you for your diagnosis, but I'm gonna go ahead and do it this way. That's not the case. So while I understand, I want everyone to do their research, be educated, but every market is different. And even in the market, there is subsections, submarkets that may present opportunity. As I said in yesterday's video, there was a property priced in the low fours that we ended up getting seller concessions for. Why was that? Because it was on the market for 11 days.
So
Now,
wrong. I said a week.
exactly. It was on the market for 11 days. And in reality, to me, I'm like, 11 days is 11 days. That's not long. But sellers start to panic and wonder what's going on. So you can use that against them. So don't get discouraged. You just have to find your opportunity and be diligent. And if you want that home that is all the way done up to the nines and it's in that price point, 250 to about 450, I'll say 500. 500 is a push, but 500, just know if it just hit the market, you're going to be going up against a lot of competition.
Yeah.
But if you see it's still on the market after a weekend, after a week, there's opportunity for you. So don't get discouraged, but do listen to real estate professionals that you surround yourself with, your broker, mortgage broker, and your real estate broker as well.
Yeah.
Give me 1 second. Real quick question is, are there programs for new home constructions for fixed interest rate?
Yes, we have renovation loans. The I guess the construction of permanent loans, if you're looking to do something from scratch, there are loans available that are out there. They tend to be a little more or considered to be more risky. So all lenders don't offer that. But if you were in a situation, say you approved for 500,000, you couldn't quite find what you wanted, but let's say you find something that's 250 or 300, you can get a renovation loan, go in, do everything, new bathrooms, new floors, new kitchen, and get it the way that you want. And as long as the home post renovation is going to be at or below the number that you're pre-approved for, you can roll all of your all of the construction and renovations into that loan.
Yeah.
So that's an awesome opportunity, for people that are having a difficult time finding the property that's checking all of the boxes.
Now, one other thing I want to say, a do is if you're worried about interest rates and being priced out of the market, buy a resale home or a new construction home that you can move in the next 30 to 45 days. Do not, if you're on the border, as far as being priced out and interest rates and all that, do not buy a new construction home and it's going to be ready in 6 months where we don't know what is going on. And then the cost for you to lock in your rate is, I don't know. What do you say about that? What is your opinion?
It can be pricey. So what I will say a good do is, find a lender that's going to have products and creativity to match your scenario.
Yes.
A lot of lenders are offering, or I know at least I'm offering right now 90 days.
Yeah.
You can lock in your rate, look at the market, shop around, make a few offers, and hopefully everything will work out before that 90th day. I have found an extraordinary amount of success. Have a person that they locked in a 4.875, went on contract this weekend. Wouldn't you
Yeah.
love that? You know,
Yes. What is it? What was it? Five and a half today?
I have 5.875. It's all
Yeah.
a
Yeah.
matter of credit score is. I've seen rates in the six.
Oh
So
yeah. No. Yeah. Definitely depending on your credit score. I was thinking of like top notch, like your. Yeah.
yeah, I mean, it's a big deal. So if you are able to, do something where you can lock in the rate in advance, we know rates are going up. The Fed is going to
Yeah.
meet this week. And it's an indirect impact. They're projecting that it's probably going to go up maybe a half a point,
Yep.
but you have to consider, and if you don't understand how that works, it's they're setting rates for short-term borrowing. So the bank has to get the money from somewhere. And
Yep.
so we're passing that cost on to you. It may not be dollar for dollar, but just understand that they're raising rates very aggressively with the intent to slow things down because it's out of control right
And so it is out of control as far as the demand was crazy. They want to, it's
now.
what they coined it as demand destruction. They want to decrease demand because if you lessen demand, home prices should be able to come down or level off. They won't really come
Level.
down, but level off. They are expecting, I know everybody's expecting a housing crash or talking about a housing crash and all that, but all of the big sites, the Redfins, the Zillows, and all that, they're still expecting at least a 5.5% increase in equity this year.
Mhm.
So that's not a negative. That's still prices going up with interest rates going up. Um, Real quick, in my professional opinion, will the market ever go back to how it was? Now, when was how it was? Because if we look historically,
I mean, 2 years ago, 3 years ago.
3 years ago, I mean, I think so. I mean, I believe, and you can please let me know your opinion too, Joy, is that July, August, September, the market will be considerably slower than it is right now. I believe we will have a less transactions, but prices will still go up because there'll be less inventory on the market as well. So that's a two-edged sword. There'll be
Yes.
less transactions because there'll be less inventory,
Yeah.
meaning properties on the market, and less people qualified.
Yep.
So how it was, meaning there won't be 7, 8, 9 offers on a property. You may have two or three competing with two or three people, which, if you ask me, in the past 2 years, that's a win.
Hmm.
So,
Yeah, I definitely, agree with that. I mean, we're set for another year of historic sales. And just like how you said, the quantity, the number of homes that are sold may decrease some, but that purchase price
yeah,
up. And a lot of the statistics that are saying, oh, loan applications are down and all of this, you have to account for the fact that 30% of the transactions are cash transactions.
yep.
There are a lot of things when we see some of these statistics that are not being factored in. So I will go as far to say this: even if there was a huge market correction, 20%, prices fall 20%, you still can't buy the house because the interest rate is 6%. So
Now, this
I
is the
mean,
crazy thing.
it is. It's not gonna be
Uh,
like magical solution because it's a balance, and it's a
yeah,
balance that a lot we have to consider because it's important to consider that everything isn't going down, everything is going up on all accounts, and
yeah.
one is gonna put the other.
So, a couple things I want to touch on real quick is, can I have your VA realtor info? Contact me. I help VA clients all day. Actually, was talking. We put in. Actually, we did not put in an offer. We were going to put in an offer last night. A VA client of mine. So yeah, reach out to me. The number is in the chat. sir@sirashley.com. We can definitely help you. And you help with VA loans, correct, right?
Love a VA loan.
Yes, yes. Only thing I have to tell you, do for your guide and buying a home right now, and if you want it, if it's in North Carolina, even with the VA loan, while it's 100% finance, you still have to make sure that you have your closing costs and that seller's still going to want that due diligence deposit. So you're going to
That
have to
diligence deposit.
so you're still gonna have to come out of pocket initially for for some funds. Like I would say 15, depending on your price point. 15,000 is a safe bet. I would
And
say to have.
money, like if your offer is accepted and you go through the process and you
Mhm.
don't back out, it gets credited back to you
Yeah.
at close. So it's not additional money that you're spending and you're just giving away. You're just putting it up front rather than waiting to get to the closing table to settle it.
Yeah. Gladiator, there's tons of places in North Carolina that I believe is absolutely amazing to live, and some are more affordable than others. The Triad, I think, is a undervalued area.
Mhm.
Winston-Salem, Greensboro, High Point, tons of opportunity, a lot of new construction going on up there. Please reach out to us. We can definitely help and find a location that is suitable for you and would fit your budget as well. Um, Good website to check daily rates. What do you recommend?
Bank rate.
Bankrate. I recommend Mortgage News Daily.
Mhm.
Either one of those. I mean, they're going to give you national averages. So if you want like your particular scenario, make sure you reach out to a mortgage broker because everything it depends on your credit score. That thing it depends on a lot of things and what you put down. If you're paying down points, so it's best to know what the general rate is, but definitely contact a mortgage professional so you know what your particular rate is. The next thing I wanted to touch on, as far as guide, is now this is general, but I understand that a lot of people are having fatigue for the past 2 years. Is to put away your credit cards once you've gotten that pre-approval. Don't mess with them. Don't mess with those credit cards or but make any large purchases. I've had a colleague whose client is supposed to close in what I believe 2 weeks. Went ahead and bought a car, and it definitely messed up their debt to income ratio. And now they can't get approved for a loan. So I told my colleague you better tell your client to return that car. Um, but have you what do you say about my advice as far as do not touch your credit cards, no big purchases? I know you have buyer fatigue. The past 2 years you've been looking, you're frustrated, but do not just go ahead and spend that money.
I agree wholeheartedly. Don't do anything that's gonna alter your debt to income ratio. And that debt ratio is gonna be reflected by recurring payments that show up on your credit report. Um, please don't buy a car. Yeah, you don't, especially, and I don't know how old your audience is, but you know, parents, if you have college age students that are graduating next week, don't co-sign for that car. Tell them no. Students,
Yeah, don't do it.
I know that you think you about to hit a big payday because you're getting this BS or BA degree or don't do it.
Don't do it.
Don't do
Don't do it.
it.
And one thing I also have to add is, again, I know there's fatigue out there. The world is opening back up. If you've been on the market to buy and have saved money and put toward down payment and deposits and all that, do not go ahead and blow it on a vacation.
Mm,
I've had some people just get like, you know what, we're just going to go on vacation. We're going to pause this.
yeah.
And lo and behold, this is just what I'm seeing, tea leaves, and what I'm seeing is the market is going to open up. That's why I did mid 2022. The market's going to open up. We're not going to have a huge amount of inventory, still going to be relatively low
Mm,
inventory historically, but more inventory than we have right now based on new construction being completed
mm,
and just people listing their homes. right when the school year ends is when most sellers like to list their home because they don't have to be inconvenienced. Their kids is out of school. They can list. They can have people come in. So be patient. Be
Yes.
diligent. Know why you're buying or why you want to buy in the first place,
Mm.
and just be mindful of that.
I think that's really important
Yeah.
to be able to connect with your why,
Yeah.
because your why has to be deep enough and strong enough to get past rising rates and the payment fluctuating a couple $100. I've been telling people, I think that we have to realize you're not buying a house at this point. You're investing in the equity. Like, it's really a financial investment. It's something that, I mean, I don't know anybody that can save 50, 60, $70,000 in 1 year. You can work all the overtime in the world, but if you take your $15,000 and you dump it into a home, you may be uncomfortable for a couple of months, but the reward is going to
Yeah.
be beyond your wildest dreams. And the worst part about it is, while we're starting to talk about the slowdown, which is inevitable as we head toward recession. Recession does not mean housing crash, by the way, but
No. No.
head toward recession.
Yeah.
You don't want to get in on the end of it. You don't want to wait until the wave has hit the shore and now we're only at 3% appreciation year over year. We'll be back to normal, and it's going to take you some time to reap those huge financial benefits that a lot of people benefited from,
Yeah.
in 2021.
No, I agree with you. Um, but I do want to, while I want you to think of it as an investment in your future, in your family, in yourself. Um, I do want you just to realize that it's a home too. Like you're going to need a place to stay, and you're
Yeah.
going to be paying somebody. Either you're going to be paying these rising rent prices,
Ooh,
or
that's
you're
amazing.
going to be able to get a fixed loan
Hmm.
for 30 years and pay toward you having something of your own that you can pass on to your kids if you wanted to. So one way or another, you're going to be paying for housing.
And one of the best ways to fight inflation is to be a homeowner.
Yeah.
I read a statistic that
Yeah.
said that Americans are going to spend $500 more per month this year than they did last year. And that's just on routine expenses: food, child
Mhm.
care,
Gas.
gas, all of it. Cars cost more because there's a shortage on the chips that they have. So, I mean, to have that in addition to a $400 increase in your rent, that can be insurmountable for a lot of
Yeah.
families.
And and that's the thing. People aren't looking. People are thinking of the present right now. And I want everybody to think, I don't want everybody to think like me, but I want everybody to think the long game. Like the decisions you make today is going to impact you 3, 5, 10 years down the road. The decisions you made last year, 2 years ago to not buy is impacting you right now.
Mhm,
So, and the people that did buy, they are sitting on at least 30% equity,
mhm,
which in most cases is $100,000.
mhm,
So your decisions right now will impact you moving forward, and
mhm,
your indecisions before are impacting you today. So you can continue with anything. You can continue making the same mistake and repeating it,
mhm.
or you can decide, you know what, I'm gonna make a change and suck it up, sacrifice for the time being. While it may be a little uncomfortable, I may have to, man, I gotta pay 4 or 5 more thousand dollars in due diligence deposit to win. If that's what it takes, if you have it and it's not like your last penny, then I say do what's necessary. Sorry, I got my phone. It's not on do not disturb. I got clients calling. Sorry, my fault.
Somebody mentioned something about student loans. What was?
Yes, I did have that. I keep taking it back. But Rose mentioned, what is your take on having high student loans? Real quick before you answer, my take on it is student loans are awful.
The devil.
but a necessary. I didn't have student loans from undergrad. I did obtain student loans in law school, and yeah, no, student loans aren't the look, but they are necessary evil, and I wouldn't trade it for the world, because it opened up so many doors and opportunities for me. Even if I don't practice law right now, just the
Option.
network,
Mhm.
the colleagues, the
Yeah.
doors and avenues it opens. But as far as owning a home, I know what I have to say, but you probably are more eloquent in it. So regarding student loans right now.
And so, again, one of my favorite things to say, a lot
Mhm.
of people are very surprised when I say student loans is not what's holding people back from purchasing homes. Student loans, one thing, can be manipulated very, very, very easily.
Yep.
If you have federal student loans, pick the phone, say, "Hey, I ain't got it. Can we let me put something on it?"
Let's let's work out a payment plan and get the lowest amount possible. Get that
Get it
lowest
in
amount possible.
writing, and your problem is solved.
I
Like,
mean, I think at one point when I graduated, like my payment was like $20 a month. Like it just was what it was. Like I ain't got it. Even if I got it, I ain't got it. Even if I have it, I ain't got it. You're gonna see
yeah.
this.
So
I'm gonna
no,
see
the
it through.
student loans is it's not. I mean, and I'm really transparent. I think I
Yeah,
have probably $150,000 in student loans, and most of that is interest that's
yeah.
accrued over the last 18 years. But
And you are a homeowner,
yeah, and
and we used to be in the same community. Yeah,
yes,
yeah.
and so I will say though, I mean, things are getting more and more flexible. The Biden administration, not to be political, but the Biden administration is trying the best that they can to make it more comfortable.
Yeah.
I think they're gonna probably change some of the formulas for the income-based payments. They've already changed the FHA guideline in terms of allowing us to use a 0.5% instead of 1 full percent.
Hmm.
There's some whispers about forgiveness. I mean, the list is going on and on and on. I would never let student loan debt stop me from being able to purchase a home.
Now, what I see is stopping people is that high ass car payment.
That's the car payment. Yes, absolutely.
Like that's what I've seen people get
Oh,
hung up. Is debt
BMW
to
and say,
income.
got it.
Yeah. Like that high car payment. Like as long
Yeah.
as it gets you to point A to point B,
Yeah.
um, like you can get a car after you get a house.
Hmm.
So that's what I've seen a lot of people hang up on. And if you want to, you can get creative to where I don't know if you are a couple and if this works out for you, if you're a couple, is one person could buy all the cars in their name, the other person who's going to get the loan, the mortgage,
They
doesn't
have
have any of those car payments, those reoccurring debts, and just use them on the mortgage and see what happens. You can balance things out and try to game plan and strategize. That's just sometimes it works, but you just have to, I say, talk to your mortgage broker and see what's the best option.
agreed. Yeah, it's always the car. It's always, always, always the car. Every time. Never fail.
Man, and then they try to refinance the car. Man, I
Always.
had I had somebody try to want to sell a home, and they were going to make a decent profit,
Yeah.
but they could not get pre-approved for a new loan because of their car payment.
Always the car. And I mean, and I think I said it before, y'all, like $500-600 is like $1,000 or more. And as the interest rates go up, that number goes up.
Yeah.
And of the gap in purchase power that you will have.
Hmm.
So, yeah, oh, I got tired of getting my car fixed. I got a 550 Honda Accord.
You can get a car after you get the house.
Get the car after the house, please. I mean, like I said, the difference in your affordability, it is substantial.
Yes.
It is.
Yes.
So I think that's really, really important. I had something on my list.
We'll get to you in 1 second, Kay.
But I don't know. But yeah, I think, oh, when it comes to creativity, have you tried third parties helping out with getting offers accepted?
Like ribbon and stuff?
Yeah.
Yes. Yes. I that's actually a do. Is if you have a do that you should do to get your offer accepted and then trying to buy in mid 2022
Yeah.
is if you're we touched on it a little bit last night, but if you are trying to make an offer on a home and your offer would be contingent on the sale of your property, go through a third party intermediary like Ribbon, and there's another company as well here in the Charlotte area
Mhm.
that
I've-
will make your offer a cash offer.
yeah.
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 And yeah, so I mean, there's creative ways to go around it. Now, granted, there's a fee for that. Nothing's free,
Mm-mm.
but it's I believe if you end up not using like their funds, it's a 1% fee. If you end up using their funds for the house for the purchase price, if you end up using their funds, it's either a 2 or 3% fee. I understand two
So
or
I
three
have a
percent
ribbon
can be
right.
different.
That 1%, if you
Hmm.
get your own financing, it'll
Yeah,
cover the appraisal gap. I have a young lady right now that saved her $15,000.
yeah,
Literally $15,000. So those third parties are very, very helpful. Um,
yes.
FHA borrowers, things like that,
Hmm.
really helpful. So
Real quick before we go on to the next do or don't, um, what if now it's something I don't have an answer to this. Hopefully you do. If you have a higher car payment, but it's a lease and not a purchase, does it matter?
it does. So
Okay.
at least the assumption is, and I want y'all to hear the rationale because it'll probably answer other questions. We have to forecast the next 3 years of your life.
Hmm.
The rationale is when you turn that car in, you're probably gonna get another one. So we can never take away the lease payment unless you're gonna pay the entire vehicle off. So if you got a $40,000 balance and your payment is $300 a month, you don't pay it up until you can't pay it up until the lease is up. You need to pay that whole $40,000 balance.
Yeah.
Now, a purchase, again, the assumption would be, oh, well, once you're finished paying, you're probably not going to get another one. So as long as there's only 10 payments or less that are left, we can omit that debt for
Yes.
on a purchase. But a lease, no. It's totally different formula. The entire car would have to be either turned in or the entire balance would need to be paid off.
Yeah. Um, One other thing, I know you mentioned it, you touched on it earlier regarding people waiving appraisals and inspections and all that.
Yeah.
Now, right now, presently, this is going into that's happened right now. This is going into mid 2022.
Mm-hmm.
My advice is do not waive inspections and appraisal contingencies. Reason why is what I've been seeing is appraisals haven't been coming back as high as we had hoped or as high as they have been. Um, I would say either earlier this year or all of last year. The past 2.5 years, I haven't had any issues with appraisals. And I'm talking about I have had clients offer 50, 60, 70,
Mm-hmm.
highest was like 80 above asking and didn't have an issue with appraisal. No issue. The past 2 months, I've had two appraisals come back short.
Yeah.
Like one came back, well, actually, they both came back $20,000 short. Um, and we didn't have the appraisal contingency or waiver in there. We didn't have the appraisal a waiver in there. So what ended up happening is we were able to negotiate,
Mm-hmm.
and we did not. Well, one time I was a seller, one time I was representing the buyer, one time I was representing the seller, and you just negotiate it to where it works out for all parties.
Mm-hmm.
But as of today and moving on for the rest of mid 2022, I say don't waive appraisals or inspections unless you obviously just have it and that's a home that you definitely want
Yeah.
and have the funds to do so. Then by all means do whatever you want to do.
Mm-hmm.
But I felt confident the past 2 years that we were going to meet appraisals, I don't feel as confident presently that the appraisal will come back where we need it to come back to where you're not paying a difference. So my advice to you is do not waive appraisals and do not waive inspections.
That's good. Yeah, it's so funny. I got caught off guard in December. I think the purchase price was like 640 or something like that.
Yeah.
And the value came back at 613. It never occurred to me that it might
Yeah.
not. Like
Yeah.
the realtor was like, yeah, so it might come in short. I was like, why would you think that? Like, what do you mean?
Why are you putting that out there? Why are you putting that out there in the universe?
What do
Don't
you
be-
mean? And it did.
Yeah.
And so
Yeah.
they ended up going to another lender. But I mean, and that's, I'll be honest, I think that's a dangerous practice, shopping appraisals, because you continuing to push the market, push the market, push the
Yeah.
market. It just, I don't like that as a practice personally, as a consumer anyway.
Yeah.
But yeah,
I would have to say, well, I don't like it. Sometimes it's just if you look at the comps that the appraiser used, sometimes you have to contest it.
Mhm.
Like if you have a 5-bedroom and the comps they're using is 3 bedrooms,
Mhm.
that's not an apples to apples comparison.
Yep.
So at that point, you're like, you know what, we need to do this over again. Run it back.
But see, that's why they have that with FHA. They don't allow it. FHA
Yeah.
don't allow that. That's why
Yeah.
they're like, okay, no, this is it.
Hmm.
This is where we are. Because I mean, I really do. I think that probably has contributed to the housing prices going up as they have been going up.
Yeah. Um, another Well, quick. We talked about pre-approval. How soon should they get pre-approved in the process right now? What is the do? Do get pre-approved when?
When you are about 90 days out from
Okay.
purchase, within that 90-day window. So a lot of people don't realize, if you buy a house today, May the 2nd, let's say you go into contract right now at this second, you don't have a mortgage payment due until July the 1st. So if you're
Yeah.
under contract and you have a lease agreement, there's not going to be an overlap if
Yeah.
your lease is going to be up in July. So you want to back out about 90 days, give you 30, 45 days a shot, give them, 20, 30 days to get the loan closed. And there's not going to be any overlap in your
Yeah.
mortgage payment being due and your rent being due. 90 days is a good window also, because the credit report will expire after 90 days. So you don't want to have that pulled too many times.
Yeah.
As the rates continue to increase, just understand that when you're getting pre-approved, don't let your lender max you out up front.
No.
You need to leave some wiggle room. If you're not in a scenario where they can lock in the rate for that 90-day window, you have got to allow for some space.
You touched on a point that I did not make on here. Do not max out. You got to have some wiggle room in there because you don't want to be under contract and then find out after you've given your deposit and due diligence money in North Carolina, you're not getting that back.
Mhm.
And then you find out you can't get the loan because you've maxed out. Don't do that. Don't do that.
Yeah, you gotta. I mean, you gotta tread the line very, very carefully
Yeah.
with something like that, and kind of know the game that you're playing when you're doing something like that. And you always want to leave a little bit of money in your back pocket, because inevitably, as you start looking for houses, you're gonna come back and say, "Can I have $10,000 more?" Like, So we try to leave a little bit of room to make it look like we're doing a magic trick behind the
I'm
scenes.
not even gonna lie. That was me. That was me. Got approved at one price, and I'm like, yo, I need 20,000 more. I need 20,000 more.
Yeah,
I'm good for it. Bring it to me.
it's
And they did.
completely okay, but
Yeah.
you have got to leave some wiggle room. It's
Yeah.
imperative to be able to do that. One thing I will say that I didn't mention earlier, I put in my notes to make sure that I mentioned
Mhm.
one piece of advice that I would love to take credit for, but this came from Barry Habib. He's one of the housing strategist gurus. Amazing.
Yes.
He knows everything that there is to know about mortgage in the market. The suggestion is get the loan that costs the least. What that translates to is pick the highest rate that doesn't cost the most. So don't get into the weeds of I want to buy my rate down, because
I want to hear this.
When we hit this recession, they're forecasting a recession the end of the year, first quarter next year. When you see rates are coming down from 6 and they're headed into the 5s, you're going to get, I'm excited. And then you're like, oh, they're going to 4. Oh, I got to do it. I got to do it now. You're going to want to pull the trigger, and you want to save money. Don't get caught up in the rate. You got to focus on the fact that you just spent $14,000 12 months ago to get the rate that you have. So please, 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 if you are in a good financial position, that means you have good credit. That means that your debt to income ratio isn't going to skyrocket because you're not a person that's going to run out and buy a car to go into your new garage or your new house. You're going to be positioned to refinance at the outset or during that time of recession. And the reason why we know that this is going to happen is because we have to go off of history and the cycles in the housing market.
Mm-hmm.
Historically, whenever we have high inflation, we have to raise rates to bring everything down, to bring the demand down so that the supply can catch up. We have the highest inflation that we've had since the 80s.
Most definitely.
Big deal. This is the fastest that interest rates have gone up since 1994.
Yeah.
So once we get to a certain peak of inflation, it's going to start to come down. And what's going to happen is the market is going to slow to the point where now we're thrown into recession. And with the recession, historically, interest rates come down too. And it comes down 1%, 2%, could be 3%. I wouldn't say hold off and hope for 2% interest rates.
I'm praying, but I don't think it will happen. I'm praying.
If we
don't think it'll happen.
From a 6% or 6.5% down to 4.5%, you'll be better positioned to have not wasted an exorbitant amount of money to save a couple $100 a month. Real quick,
a couple things. I see there's about 80 people watching right now. Thank you for joining us. I appreciate you. If you can, tap on that like button, and it just greatly helps out the channel. So tap on that like button, and allows YouTube to know that we are providing value and that you're getting something out of this. And I want to touch on Danica's question. Do you need an inspection on a new build? In my opinion, yes, you need an inspection. I believe you need a pre-drywall inspection and a pre-occupancy inspection. Now, if you reach out to a home inspector, they should know what that is. Pre-drywall inspection is before they put drywall up, meaning the windows have been in, the HVAC has been in, the rough electrical has been in place, and you want to see, it's your first time or last time to see what's behind the walls and make sure everything has been installed and put together correctly. You don't want to find out after the fact they put walls up and wondering why this is short or why this isn't working. So definitely get a pre-drywall inspection. And then before you move in the home, once it's complete, a new home or pre-occupancy inspection. And that's just like any other home inspection, a resale home, where they're going to go through everything regarding the home. That inspection report should be anywhere from 30 to 90 pages. And it's just very in-depth and thorough. So I recommend it, even on a new build, because new homes aren't perfect. There's no perfect home. So new homes have challenges and issues as well. I don't want people thinking that just because you have a new home that there won't be problems. There are, and there will be, and it's best for you to know what that is to get the builder to correct it before you move in. Yes, big change between stopping the appraisal, waiving appraisal and inspection. Yeah, I wouldn't say a big change. Like, I've only advised it if it was something you had to have. Like, if it was one of those have-to-have properties and it was very competitive, then you do what you have to do to win. But you never want to, as a buyer, waive appraisal, or definitely don't want to waive inspection.
Now, one
Um,
say that can make you competitive, if you go to a lender that offers upfront underwriting, meaning
yeah,
you turn in all of your documentation, they put your file in front of an underwriter, they verify your income and assets, they will give you a loan commitment, and at that point you have a 0-day finance contingency because you've already had that initial underwrite completed. So that's a way
yeah.
to go, but it's going to vary from lender to lender if that lender does, allow something like that.
Real quick, I want to shout out Chuck. He is a client of mine. We're actually gonna close on his home later this month. So thank you for stopping in. Thank you for rocking with me. You know I appreciate you and your soon to be wife. So thank you. Um, we had one more. We had a question. Hello, I have a home that can get close to 4,000 a month. Should I refi and take the money out for another home, or should I sell it? The home is valued in the low 600,000s. I know what I'm gonna say. What do you say?
It depends on your long-term goal.
Yeah,
It's a hard question. I mean,
because
you
everybody's
could.
situation is a little different.
Yeah, everybody's situation is going to be different. How much are you going to profit if you rent it out from month to month? Like it's
Yeah.
a lot of moving parts to that question.
In my opinion, I could care less about moving parts. While that is the correct answer,
Well,
it depends.
we care a lot about moving parts. Okay.
It depends, right? But as the real estate investor, I say hold on to it.
Mm-hmm.
Refi, take some money out. Depending on, again, it depends on how much you have and what the refi is going to cost and all that. But at the very least, even if you don't refi and you want to buy new or buy a new home, do not sell that home if you don't have to. Rent it out
Mm-hmm.
and just live on the profits. And once you do that, once you have, even if you don't want to be a real estate investor, some real estate investors end up being real estate investors by accident. Once you have about 4 properties, your life changes between
Retirement.
the cash flow. Exactly, between the cash flow and the equity, and you can get creative with things. um, Definitely rent it out, if you ask me, because at that point you don't really care what the value is. Most people are like think just because the market crash everybody's going to sell. No, as a renter, I mean, as a landlord, I could care less what the value of my home is, so long as I'm cash flowing it every single month. It could go down, it could lose 70% of its value. As long as I have 30-year fixed debt, and let's say that debt is $900 a month, and I have a renter in there paying me 2,000. Like, I could care less what the property value is. I'm making $1,100 a month on that asset.
Mm-hmm.
So I say, if you're cash flowing at least 250 to $300 a month on the property, then use it as a rental. That's just my quick answer without knowing all the facts regarding your circumstance.
And I will also say the formula that we use, if you were to go that route, is that you have to consider your mortgage payment plus any housing expenses, and you need to add 25% so you don't take a loss
Yeah,
on your debt to income ratio. So we'll give you, for example, if you have a $750 payment and all your housing expenses, you need to be charging somebody $1,000 a month
most
just to
definitely.
break even so that you're not in the negative
Yeah.
according to the lender's calculations.
And that's when you talk to your lender and your real estate agent. Um, they should be able to obviously do that math for you, so you know where you need to be. I just did that. I had 2 clients become property investors on accident. They had the same scenario to where they're going to sell their home, but it just makes sense for them to refinance and rent it out. And you can't beat that equity long term and that cash flow.
Agree.
And you can think about, even if it's not for you, I don't know if you have kids or a legacy, you can just leave that, put it into a trust. There's so many creative things you can do with it. So that's my advice. Um, Thanks, Chuck. I appreciate it. Real quick. So those are, I don't really have any more do's and don'ts. You have any more do's and don'ts? I want to touch on a couple more questions for the next 5, 10 minutes, and then
I
let
was
everybody enjoy
yeah,
their Monday.
I have one. I have another one.
Hmm.
I think a do. Well, I would
Yes.
say a don't. Don't automatically assume discount points is going to give you what you're looking for. I think people throw around, oh, I want to buy my rate down because it's a phrase that's out there and they think that's what they're supposed to say. If you just add one additional payment per year, you'll get more miles on your principal, much more than you would if you just bought the rate down. And
Yeah.
again, like I said, thinking about the fact that the market fluctuates, and if the rates start to fall, you're gonna forget all about the fact that you spent an extra $5,000, $6,000.
Yeah. Yeah.
So I would say biweekly payments oftentimes is going to accelerate the amount of principal that you're paying down, which effectively gives you a lower interest rate because the rate translates to dollars spent every year on interest. So that's just something to consider. Also, as
So
interest rates go up, don't forget it's a tax write-off. So
that is, thank you. Most people don't realize that. They don't remember.
yeah.
So another benefit and reason why I love real estate is, think about the people that founded America, right?
Mhm.
They were concerned about property. Now, sometimes that property wasn't always real estate, but they were concerned about property. And our tax code is written to protect property owners
Mhm.
and business
Business
owners.
owners. Mhm.
So if you don't have either one of those, you're not taking full advantage of our tax code and our system. America, if you ask me, it's just a game. And a lot of us were not taught the rules of the game or how to play the game. Once you know the rules and how to play it, it becomes a lot easier to get ahead in the game.
Mhm.
So, property ownership, in my opinion, is one of the easiest ways to get in the game and to climb up the ladder to where future generations will appreciate the sacrifices you made.
One last one is if you're doing new construction, don't be wooed by $3,000 or $4,000 off your closing
Oh,
costs.
yes. Talk about it. Please talk about it. I had to tell some people recently, because, real quick, not to cut you off, I had to talk to people recently about, well, the builder's going to give me this incentive and all that. And I'm like, you need to shop.
Yeah.
Do not take their word, because they're not in it for your best interest.
No, they're not.
But please go on and finish your
For
thought.
profit. No, they are very much for profit.
Yeah.
You have to consider, like, in this market where they are making you bid on plots of land and they're doing highest and best, why you think they're getting ready to give you something? Like, it, don't be wooed by that. I'm
Yeah.
telling you, like, you're already paying for it anyway.
Yeah.
You're already paying for it. The same way that the commission is already inside that purchase price, so is that $4,000 or $5,000 that they giving you. So don't, please do not be wooed by that under any circumstances. Don't, I mean, it's smoke and mirrors, y'all. It's the best way to say it. It's in there. You're somewhere, it's in there. You're paying for it. I promise you.
And the thing is, a lot of people don't realize is they can give you a quote or lock something in for up to 9 months. And because one, they're the builder, they're using their own finance company, they have some kind of in. Um, but more times than not, the origination fee or that rate they're giving you
Mhm.
is absolutely ridiculous. You're paying for it one way or another.
You absolutely are. Absolutely are. Like I said, it's
So
nothing free. They are
yeah,
not doing favors at all, especially when you think about some of the headlines that we've seen lately where they're coming back at the end and saying, hey, oh, we can make $30,000 more. You got it? You don't? Next. Like,
Next.
they're not your friend.
Now they will smile at you when you come in. They'll be nice, they'll be pleasant. And this is no knock. I know I have builder agents that are friends and colleagues and even
We
watch.
love
Actually, I have a
you.
lot of
We love
yeah,
you.
yeah, yeah. I know. So it's their job to get the best for their employer. So they're just doing their job. They're not, I'm sure they don't wake up every morning like, hey, how can I screw over this buyer? But no, it's their job to put their employer, the builder, in the
Yeah.
best position possible.
Yes.
And if you go in there unrepresented, you have nobody advocating for you to put you in the best position possible. No, as a agent for new construction that represents you, a lot of times we can't really negotiate price, but there are things that we can do. And if you do not have an advocate that is knowledgeable, you've just lost that opportunity, and people don't, and you lost that ability to really hold that builder and those agents accountable.
Yeah, agreed.
I know we've gone on for about an hour. Let's do about 4 more minutes. So we're 105. That's all right. I know you.
That
I don't know
works.
what you got this evening.
That works.
Okay. I was gonna say, so I know you're a big football fan and you probably watched the draft, and the draft is over with right now. So I should have you for at least 4 more minutes. Um, 1 second. I saw something. Here we go. There have been delays in building of new construction due to shortage of materials. How would that affect a person under contract in terms of rates? That will have a big effect if it keeps pushing it back and you didn't lock in your rate, right? It could definitely cost you anywhere, a couple $100 a month.
Or even if you did lock it in and that rate expires, you're going to
Thank
be
you. Yes.
conditions at that
Yeah.
time, because those lock extension fees they can be expensive if you have to extend it for weeks and months. So yeah.
Because you're paying for that risk. Because the lender is taking that risk, you're paying for that.
Absolutely.
So there are a lot of material shortages right now. I thought we were going to be past this. I thought we were going to be past it in the first quarter of this year, but China just went on shutdown again, with Shanghai went on lockdown. So and it's not going to happen in the next 6 months, but until America gets back to manufacturing again, anytime something happens globally, as far as a lockdown or anything like that, it's going to impact pricing for materials and goods for building a home, and the length of time is going to end delays. But the challenge with having manufacturing jobs here is a lot of Americans feel like we're above that nowadays, or we don't want to get paid that wage. So it's a double-edged sword.
I agree.
Any modular home companies you would recommend? Do you know of any? I don't have any off the top of my head. So we're in the Charlotte area. There's not many modular
Clayton
companies here.
Homes. I think Clayton
Yes,
Homes.
that is true. That is true. But I do some business in the Triad area, and there are several modular home companies in that area. And feel free to shoot me an email. I'm about to put my email in the comment section, and I can give you a list of 2 or 3 modular home companies that you can check out. And even so, prices with modular homes aren't as expensive, but even their prices have gone up recently as well. One thing I do want to say is, so last summer, the big craze was lumber prices being absolutely ridiculous. Right now, so they're like what, $1,600, $1,700, maybe $1,800. Right now, they're not back to pre-pandemic levels around 6, 7, but they are around 9. So it'll be interesting to see once builders have exhausted the lumber that they bought at high prices, if
Mm.
they're going to pass on those savings to you, the consumer, the buyer, because they aren't paying that exorbitant amount for lumber costs. That's just something that I'm thinking and looking out for as we go into the rest of this year in July and August and September. So hopefully, if they do pass that on to you, which when they're in to make a profit, so that's not guaranteed, you might see home prices really level off for new construction.
Hmm. I read a statistic that said that it's like 6 million houses short. So they
Yes,
build something like 700,000 houses per year for the next 10 years
we
to
still don't
break.
have enough.
So
Yeah.
again, this idea that all of a sudden things are just going to make this sharp turn is, the numbers are, I mean, we are very, very, very behind. And as an industry, we've not kept up the way that we should have.
And part of that, not even part of that, the reason for that is the last recession, the housing crash, a lot of these smaller builders went out of business.
Hmm.
So when you don't have all of the builders that were building, we have a shortage. And
Hmm.
that shortage didn't really catch up to us until the pandemic when everybody wanted a home or
And
more space.
eligible. Everybody's out of bankruptcy now. Everybody's
Yeah.
out of their foreclosure waiting period now.
Yeah.
A lot of those products that went away, they came back. It was, everything was happening at the same time. So yeah.
So thank you, Joy, for allowing me to take up over an hour of your time and for sharing your insight, your knowledge, uh, and just wisdom and perspective regarding this housing market. Can you provide everyone? I'm about to type it in as well, and it is in the description, but I'm about to put it in the comments right here. What is your number for people to
Um,
reach you at?
okay, my number is 704-577-4992, and I am with Prosperity Home Mortgage, and I'm licensed in multiple states. So I'm,
Can you list those states off? I'm gonna put you on the spot. I know it's like
oh
10
yeah,
of them.
okay, let's go. So Virginia, North Carolina, South Carolina, Georgia, Tennessee. Think I'm in Kentucky. Uh, Illinois,
Yeah, yeah.
Oklahoma, Texas, Alabama, and Arizona.
Perfect, perfect. Thank you, thank you. And feel free, reach out to me if you have any questions. I typically answer emails in the morning. So I don't look at my email throughout the day unless it's very pressing or important. Just because once I open my email, that's like an hour, 2 hour task to reply back to everything. So best way is to shoot me a text and leave your name, who you are in the text. I don't want just a random text because do you respond to just random text without knowing who's texting you?
Yeah,
I don't. So
I do.
so leave your name and who you are, um, and I'll get back to you. But thank you everybody for rocking with us on a Monday night. I will actually we're coming back tomorrow. I'm doing one more live stream. Again, it's a marathon. We haven't been doing a lot of videos on this channel. Last month I was in the middle of moving and everything, so I want to start this month with a bang and just provide you with what I believe is valuable content to help you on your journey, your financial journey, your real estate journey, and bring you experts along the way. So we'll be doing another live stream tomorrow at about same time, 7 o'clock. And please bring your questions. We're going to talk about ARMs and USDA loans. So please watch then. I'm Sir Ashley. I will talk to you later.